Jensen Huang, the CEO of Nvidia, is worth over $100 billion after Nvidia's stock increased 10 times in value since 2022 due to the AI boom, and he pays approximately 23% in taxes on that wealth when he sells stock, while the AI engineers who built the chips that made Nvidia dominant pay 50% on their $400,000 salaries. And this isn't because Jensen is evading taxes illegally. This is because he structured his compensation as stock options rather than salary, which allows him to pay capital gains rates of 23.8% instead of ordinary income rates of 50%. And by the end of this video, you'll understand exactly how the stock options trick works, why Nvidia's CEO pays less than half the tax rate of the engineers who work for him, why you can't use this same loophole even if you work at Nvidia and receive stock, and why this system of favoring ownership over labor has made Jensen Huang a $100 billionaire, while the engineers who created the AI chips get rich on paper but poor after taxes. Because once you understand that stock options for executives are taxed completely differently than stock grants for employees, you'll understand why tech CEOs become billionaires paying 23%, while tech workers stay upper middle class paying 50%, and why this gap will never close, because the tax code is designed to reward founders and executives who own equity, while punishing workers who earn salaries. Before we explain the options trick, let me show you the exact numbers of how much more an Nvidia engineer pays compared to Jensen Huang, and this will prove that the system is rigged against even the highest paid workers. A senior AI engineer at Nvidia makes approximately $400,000 per year in total compensation. This includes salary of around $250,000 plus stock grants worth $150,000 that vest over 4 years. And here's how that engineer's taxes break down. Federal income tax on $400,000 is 37% marginal rate, which after deductions is about $130,000. California state income tax, because Nvidia headquarters is in Santa Clara, California, is 13.3% on income over $300,000, which is another $53,000. Medicare tax is 1.45% on all income, with no cap. That's $5,800. Social Security tax is 6.2% up to the wage base of $160,000. That's $9,920. Add it all up, and this engineer pays $198,720 in total taxes on $400,000 income, which is an effective rate of 49.7%, almost exactly 50%, meaning this engineer takes home $201,280, just barely over half of what they earned. And this is before state income tax withholding adjustments, so the real take-home might be even less. Now here's what Jensen Huang pays on the same $400,000. Except Jensen doesn't earn $400,000 in salary, he exercises stock options and sells the resulting stock. Jensen Huang's base salary from Nvidia is approximately $1 million per year, which is high but not extraordinary for a Fortune 100 CEO. But the real money comes from stock options. Jensen received massive option grants over the past 20 years when Nvidia was much smaller, and those options allow him to buy Nvidia stock at prices like $10 or $20 per share, and today, Nvidia trades at over $140 per share after the AI boom, so when Jensen exercises an option to buy stock at $10 and immediately sells it at $140, he makes $130 per share in profit, and that profit is taxed as long-term capital gains if he held the option over 1 year, which is 20% federal plus 3.8% net investment income tax, total 23.8% federal, plus California taxes capital gains as ordinary income. So add 13.3% state, and Jensen's total rate is 37.1% on the gain. But unlike the engineer, Jensen doesn't pay Social Security or Medicare on option gains, only on his $1 million salary. So on large option exercises, his effective rate approaches 37%. And actually it's lower because he can use various strategies to offset gains. So his real effective rate is probably closer to 30%. But we'll use 37% to be conservative, which is still 13 percentage points lower than the engineer's 50%. And on $100 billion in wealth, that difference is $13 billion in tax savings over a lifetime. But here's where it gets even more unfair, because the scale of Jensen's option gains is astronomical compared to employee stock grants. According to Nvidia's proxy filings, Jensen Huang has exercised and sold approximately $3 billion worth of Nvidia stock over the past few years as the stock price exploded. This includes planned sales under 10b5-1 programs where he sells shares on a predetermined schedule. And on that $3 billion in stock sales, Jensen paid approximately $1.1 billion in taxes at roughly 37%, which means he kept $1.9 billion after tax. If that same $3 billion were taxed as ordinary income like the engineer's RSUs, he would pay the top rate of 50% including all federal, state and payroll taxes, which would be $1.5 billion in taxes. So by using stock options taxed as capital gains instead of salary or RSUs taxed as ordinary income, Jensen saved $400 million in taxes on $3 billion in proceeds, and this is completely legal. And the engineers who designed the GPUs that made Nvidia's AI chips dominant are paying higher rates on their 400,000 salaries than their CEO pays on his billions. And when you understand how stock options work versus how employee RSUs work, you'll see that this disparity is built into the tax code by design. What would you do if you discovered that your CEO, who is worth $100 billion, pays a 23% tax rate while you pay 50% on 400,000 despite working at the same company, building the same products, and that this massive disparity exists not because of illegal tax evasion, but because executives get stock options taxed as capital gains, while employees get RSUs taxed as ordinary income, and that this distinction in the tax code is deliberately designed to make executives rich and keep workers upper middle class. This is the reality at Nvidia and every other tech company, and most engineers don't understand why they can't replicate Jensen's tax strategy, even though they also own Nvidia stock. If you're starting to understand that the tax system treats executive stock options completely differently than employee stock grants, that Jensen Huang paying 37% while his engineers pay 50% isn't an accident, but is explicitly written into the tax code, and that this is why tech CEOs become 100 billionaires while tech workers stay stuck at single-digit millions. No matter how high their comp goes, then stay with me because what comes next will show you the exact mechanism of how stock options are taxed versus RSUs, why you can't get options as an employee, and why this loophole will never close because the executives who benefit from it are the ones who lobby Congress. Subscribe now because very few channels will explain why the person who runs Nvidia pays half the tax rate of the people who built Nvidia's products, and understanding this is essential to realizing that you'll never become truly wealthy as an employee, no matter how much equity you receive. Here's exactly how stock options work and why they're taxed at capital gains rates instead of ordinary income rates. And this is the critical loophole that makes Jensen Huang rich, while Nvidia engineers stay merely well off. A stock option is a contract that gives you the right to buy company stock at a specific price called the strike price, regardless of what the stock is trading at. So if Jensen received options in 2010 to buy Nvidia stock at $20 per share, and today Nvidia trades at $140, Jensen can exercise those options, pay $20 per share to the company, receive the shares worth $140, and immediately sell them for a $120 per share profit. And here's the key, that $120 profit is taxed as a capital gain, not as ordinary income, as long as Jensen held the option for more than 1 year before exercising, which is almost always the case for CEO options because they vest over multiple years. The IRS treats this as an investment gain rather than compensation, the theory being that Jensen took risk by accepting options instead of cash salary, and he should be rewarded with lower taxes for that risk. And the capital gains rate is 23.8% federal compared to 37% for ordinary income. And Jensen doesn't pay Social Security or Medicare tax on option gains, so he saves another 7.65% there, which means options are taxed at 37% total, including California versus 50% for salary, including all taxes. Now compare this to how Nvidia engineers receive stock, which is through restricted stock units or RSUs, and RSUs are taxed completely differently than options in a way that ensures employees can never get the same tax benefits as executives. When an Nvidia engineer receives an RSU grant, let's say $100,000 worth of Nvidia stock that vests over 4 years, that stock is treated as ordinary income at the moment it vests. So when $25,000 worth of stock vests in year 1, The IRS says that's $25,000 in wages, and the engineer pays 37% federal, 13.3% California, 1.45% Medicare, and 6.2% Social Security up to the cap, total about 50% on that $25,000, which is $12,500 in taxes, and the engineer receives $12,500 in stock after tax. Then if the engineer holds that stock and it appreciates, let's say it goes up 50% to $37,500, and the engineer sells it, they pay capital gains tax only on the $12,500 gain above the vesting price, so they pay 37% on $12,500, which is $4,625 in taxes. So on the original $100,000 RSU grant, if it appreciates 50% before sale, the engineer pays $50,000 at vesting, plus about $18,000 on gains, total $68,000 in taxes on $150,000 in value, effective rate 45%, whereas if that same $150,000 came from options granted at formation like Jensen's early grants, it would all be taxed as capital gains at 37%, total $55,500, which is $12,500 less in taxes on the same stock appreciation. This example shows that even when employees hold stock and benefit from capital gains on appreciation, they still pay far more than executives because the initial stock value is taxed as ordinary income at vesting, and there's no way for employees to get around this. The IRS explicitly treats RSUs as compensation taxable as wages, while stock options, granted to executives at formation, are treated as capital investments taxable as capital gains. And this distinction is written into the Internal Revenue Code and has been upheld for decades, and it's why tech CEOs pay 37%, while tech workers pay 50%, even though both are receiving company stock as compensation. The only difference is when they received it and what form it took. CEOs got options early at low strike prices, employees get RSUs later at high valuations, and the tax treatment is night and day different. Here's why you can't get stock options as an Nvidia engineer, even though that's what Jensen Huang used to become a $100 billionaire. And this will show you how the system is rigged to keep the options loophole exclusive to executives and founders. Stock options as a form of compensation are primarily granted to executives, founders, and very early employees of startups. The reason is that options only make sense when the strike price is very low, because the profit comes from the difference between strike price and sale price. So if you join Nvidia today, when the stock trades at $140 and get options with a $140 strike price, those options are basically worthless, unless the stock goes way up. Whereas if you joined in 2000 when the stock was $5 and got options at $5, those are worth $135 per share today, which is why Jensen is rich. Public. Companies like Nvidia don't grant options to regular employees anymore. They grant RSUs instead, because RSUs are simpler to administer, and employees prefer them because RSUs have value even if the stock price stays flat, whereas options are worthless if the stock doesn't go up. So from the company's perspective, RSUs are a better retention tool, and from the IRS's perspective, RSUs are better because they generate immediate tax revenue when they vest, whereas options generate tax revenue only when exercised, which could be years later. So there's bipartisan support for treating RSUs as ordinary income, and this means that today, if you join Nvidia as an engineer, you'll never get the tax-advantaged options that Jensen received. You'll get RSUs taxed at 50%. And the only way to get options is to be a founder or C-suite executive, which 99.9% of people will never be. Let me show you the exact numbers of how much Jensen Huang has made from Nvidia and how much he's paid in taxes, and this will prove that even at the lower capital gains rate, he's paid far less as a percentage than his employees. Jensen Huang co-founded Nvidia in 1993 and has been CEO since then, over 30 years, and when Nvidia went public in 1999, Jensen owned approximately 70 million shares, which was about 20% of the company, and those shares were worth around 300 million at IPO, and today, Jensen owns approximately 87 million shares worth about 12 billion at current prices of $140 per share. But he's sold billions more over the years. Estimates are that Jensen has sold approximately $5 billion worth of Nvidia stock over the past decade through various sales and option exercises. And on that $5 billion, he paid approximately $1.85 billion in taxes at an average rate of 37%, including California state tax, which means he kept $3.15 billion after tax. If that same $5 billion had been taxed as ordinary income like his engineers' RSUs, he would have paid 50% or $2.5 billion in taxes. So by using the options and capital gain structure instead of ordinary income, Jensen saved $650 million in taxes on $5 billion in stock proceeds, and that's just on the stock he sold. His remaining $12 billion in holdings have appreciated tax-free because you don't pay tax on unrealized gains, and when he eventually sells that, he'll pay 37% instead of 50%, saving another $1.56 billion compared to ordinary income rates. So over his career, Jensen will save over $2 billion in taxes compared to if his stock were taxed as employee compensation. And this $2 billion in savings is money that could fund infrastructure, schools, healthcare, or deficit reduction. But instead, Jensen gets to keep it because the tax code treats executive options better than employee RSUs. Meanwhile, Nvidia's engineers have collectively paid far more in taxes as a percentage of compensation, despite making infinitely less money than Jensen. Nvidia has approximately 30,000 employees, a large portion of whom are engineers, and if we assume an average compensation of $300,000 per year across the engineering staff, that's maybe $9 billion in total annual engineering payroll, and those engineers collectively pay about $4.5 billion per year in taxes, at an average 50% rate when you include federal, state, and payroll taxes. So every single year, Nvidia engineers pay more in total taxes than Jensen Huang has paid in his entire 30-year career as CEO, despite Jensen being worth $100 billion and the engineers collectively being worth maybe $20 billion total across all 30,000 people. And this disparity exists entirely because executives get options taxed as capital gains, while employees get RSUs taxed as ordinary income, and there's no economic justification for this. Both are forms of equity compensation for work done, but the tax code treats them completely differently based on when you received them and what your title was. Here are the arguments defenders make for why stock options should be taxed as capital gains and why those arguments are dishonest. They claim options should get capital gains treatment because executives take risk by accepting options instead of higher cash salaries, so they deserve a tax break for that risk. But this is false. Jensen Huang's base salary is $1 million plus billions in options. He's not taking a pay cut. He's getting massively more compensation than any engineer, just structured as options instead of RSUs. There's no real risk when you're getting options worth hundreds of millions on top of $1 million salary. They claim that options don't have value when granted, so they shouldn't be taxed until exercised, and when exercised it's a capital gain, not compensation. But this is semantics. Options absolutely have value when granted. That's why executives negotiate for them, and the fact that the value is realized later doesn't change that it's compensation for services. Your 401k match is also compensation realized later, but it's still taxed as ordinary income when you withdraw it. They claim that if we taxed options as ordinary income, executives would demand even higher cash salaries, which would cost companies more, but this argument actually supports taxing options as ordinary income, because it would force companies to be honest about how much they're paying executives. Right now, executive comp is hidden behind stock options that don't appear on the income statement until exercised, so shareholders don't see the true cost. And if options were taxed as ordinary income, companies would have to expense them properly, and executives would demand transparency, which would be good for everyone except the executives who benefit from the current opaque system. The real reason stock options get favorable tax treatment has nothing to do with economic efficiency and everything to do with lobbying. The executives who receive options are the same people who fund political campaigns and hire lobbyists to ensure options stay taxed as capital gains, and this creates a self-reinforcing cycle where favorable tax treatment makes executives richer. Rich executives donate to politicians. Politicians keep the favorable tax treatment, and the cycle continues. Jensen Huang personally doesn't donate massive amounts to politics like some tech billionaires, but Nvidia as a company spends millions on lobbying, and the tech industry collectively spends billions lobbying Congress, and one of their top priorities is keeping capital gains rates low and keeping stock option taxation favorable, because if options were taxed as ordinary income, tech executives would lose billions in tax savings, so they spend millions lobbying to save billions in taxes, which is an incredible return on investment. Here's what happens when you try to replicate Jensen's strategy as an Nvidia employee, and this will show you exactly why the system is rigged to prevent workers from accessing the same tax benefits. Let's say you're a senior engineer at Nvidia, and over 10 years you accumulate $2 million in Nvidia stock through RSU grants that vest annually, and over those 10 years, the stock goes up 5 times from when you started, so your $2 million in grants is now worth $10 million, and you decide to sell it all. Here's your tax bill. The original $2 million was taxed as ordinary income when it vested, so you paid 50% or $1 million in taxes over the 10 years as the RSUs vested, and you received $1 million in stock after tax. Then that $1 million appreciated to $10 million, a $9 million gain, and you pay 37% capital gains on the $9 million gain, which is $3.33 million in taxes. So total taxes on $10 million in value are $1 million plus $3.33 million equals $4.33 million, effective rate 43%. Now compare this to if you were a founder like Jensen and received options at formation when the strike price was near zero. If your $2 million in options appreciated to $10 million and you sold, you'd pay zero at grant because options aren't taxed until exercise, and you'd pay 37% on the full $10 million at exercise, which is $3.7 million. So you'd pay $1.37 million less in taxes on the same appreciation simply because you got options instead of RSUs. And this gap of $1.37 million on $10 million in stock is entirely due to the tax code treating founders better than employees, even though both worked hard and created value for the company. The practical reality is that this system makes it almost impossible to become truly rich as an employee, even at the highest levels, because the 50% tax rate on high salaries plus the ordinary income treatment of RSU vesting means that no matter how much stock you accumulate, you're paying double tax compared to executives, first at vesting, then on gains, whereas executives pay once on gains, and this is why tech CEOs become billionaires while senior engineers top out at tens of millions at best. The tax system ensures that the ownership class stays separate from the working class, even within the same company making the same products, and there's no way to bridge this gap through hard work alone. You'd have to become an executive or founder, which requires political skill, luck, and connections that 99% of people don't have, so the system preserves the wealth hierarchy by design. Now you understand exactly how Jensen Huang pays 37% tax on $100 billion, while Nvidia engineers pay 50% on $400,000. It's because Jensen received stock options as a founder that are taxed as capital gains when exercised, while engineers receive RSUs that are taxed as ordinary income when they vest. And you understand that this distinction is explicitly written into the tax code and has been preserved for decades despite making no economic sense, because options and RSUs are both compensation for work, but are taxed completely differently based solely on title and timing. And you understand that Jensen has saved over $2 billion in taxes over his career compared to if his stock were taxed as employee compensation, while Nvidia engineers collectively pay more in taxes every single year than Jensen has paid in his lifetime. And you understand that this system can't be fixed by working harder or getting promoted, because even senior engineers get RSUs, not options, and the only way to access options is to be a founder or C-suite executive. And you understand that this system will never change, because the executives who benefit from it control the political system through lobbying. So engineers will keep paying 50%, CEOs will keep paying 37%, and the wealth gap will keep growing until the tax code is rewritten to treat all equity compensation as ordinary income, which will never happen because the people who benefit from the current system are the ones who fund Congress. If this explanation of why Nvidia's CEO pays half the tax rate of Nvidia's engineers has made you understand that you'll never become truly wealthy as an employee, no matter how much stock you receive, because employees get RSUs taxed at 50%, while founders get options taxed at 37%, and that this disparity is deliberately designed into the tax code to preserve the hierarchy between owners and workers, then you need to see what we reveal next, because the stock options loophole is just one of many ways executives avoid taxes. Subscribe now and prepare to discover how Mark Zuckerberg pays 15% while Facebook engineers pay 48% using the qualified dividend loophole, how Elon Musk borrowed $88 billion tax-free using stock as collateral while you pay 37% on salary, how Jeff Bezos paid 0.98% tax on $100 billion using the borrow-buy-die strategy, and how private equity executives paid 20% on billions using the carried interest loophole while you pay 37% on wages, because once you understand the complete system of how the tax code is rigged to ensure the ownership class never pays their fair share while the working class is taxed to death, you'll understand why wealth inequality has reached levels not seen since the Gilded Age, why the American dream of working your way to wealth is mathematically impossible under current tax rates, why your children will be poorer than you despite better education and harder work, and why this will never change through voting because both parties are funded by the tech executives who benefit from these loopholes. So the transfer continues. Jensen keeps getting richer at 37%. Engineers keep working harder at 50%, and the gap grows forever.